Hey everybody, happy Monday. Welcome to the Pulver Report. Let's talk about all things stocks, forex, cryptos. It is 9 o'clock on the 24th of May. Happy Monday, everybody. Let's go ahead and get started. Busy week. I actually just got everything put in for our Equities on Demand session, and we have that session coming up at 10 o'clock, and a busy week to start things off. We have 1, 2, 3, 4, 5, 6, 7, 8 times 2, so we have 16 trades. 17, 18, 19, 20, 21. So that's 5 and 10. Wow, we have 26 trades already to kick things off for this week. So it's going to be a very busy Monday session. Looking forward to seeing everybody at 10 o'clock at the top of the hour for Equities on Demand. So let's get into the charts here. I want to take a look. A lot of chart alarms going off over the weekend on cryptocurrencies. I did get back into a couple. I'll talk about that in a little bit. And hopefully, we're not done with the lows yet. Still curious to see if we can find those yearly pivots and some of those very close mining costs. So Ethereum retapped the lows from last week. That's the thing about cryptos is it's a 24/7 market. So if anyone was paying attention on the weekend, I had a chance to buy those lows from last Wednesday, maybe even a little bit lower. So let's go into the risk disclaimer really quickly. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptocurrencies, there's risk in trading. Okay, everything I'm talking about is not for investment advice. It is for educational purposes only. You know the dealio. Okay, let's get into the charts here. So I want to start off with some cryptos. We had a retest of the low. There's a wick low at, it's not BTC. BTC USD. So you can see here that from Wednesday, we had a wick low on Wednesday the 19th at 30,000. It was like 30,235 according to a Bitstamp feed. I can see if there's another feed out there. But we retested over the weekend. So yesterday's price action retested the lows around 31,000. We are now trading at 38,307. Again, I don't know if we're going to just start rallying up and this is the low, right around 31,000 on Bitcoin. I'm also looking at GBTC. I have a pending order in on GBTC at $24.10. So this is, essentially like an exchange traded fund. If you're going to buy and hold, I have a yearly pivot here at $24. And I'm hoping that GBTC can fill right around 24.05 or 24.10. And this would be something I'm willing to buy and hold. And this would be kind of the equivalent of buying Bitcoin around, let's say 20K or 24K for that matter. So if that's the play, that's a pretty good long-term hold. If you're looking at just buying the actual crypto, we're off the lows from today's price action, but I am still wondering if we have our big sell-off from last week, a little bit of indecision, more of a flush down to reestablish. We have some strong support here from January of this year. Strong support from January. Good morning, everybody. I see everyone's tuning in and saying hi. So we've got Wayne in the house. Donna, good morning. Joanne, good morning. Chris and Charles. Diane is here. Janice is here. Craig in the house. Joe is here. Ed, what's happening? All right, nice to see everybody. So we have our lows from January. We have a nice little pivot cluster here around 25,000. We have our yearly pivot around 20,000. Like I said, I am hoping that we have this able to go down just a little bit lower. Maybe a more deliberate base is going to form right around this yearly pivot. So I'm not into Bitcoin yet. I'm still holding Bitcoin at 3,500, and I'm looking for levels to add, of course. And my interest is peaked if these chart alarms go off. So if we can hit last Wednesday's low on Bitcoin, that's right around 30,000. I'm interested, but more than likely it's going to be from here down to the yearly pivot. That's where I'm looking to buy. Okay. So that is Bitcoin. And the reason I want to start off with some of these cryptos is because this is where I had some chart alarms going off overnight. In fact, when I opened up my charts this morning, I had about 20 chart alarms, and they were all on cryptos. So we had yesterday's price action on Ethereum. This is a chart alarm that hit last Wednesday's low around 1850. We had a low yesterday around 1750. So I did take a small chunk. I added more to my Ethereum right there at the lows. So I have another add-on around 1850. I know that it could still fall lower. I kind of hope that it does. I hope that we have this high, low, lower high. Maybe we flush back down a little bit more. I'll be looking for some type of rise or a falling wedge in this case, or somewhere where we can build a little bit more of a deliberate bottom. Maybe it's back here around this yearly pivot, which happens to be around 500 bucks. So the level that I got in at was right around 1,800. It's a small trade, and I have another setting right around $1,000. So 1,850, $1,000 will be my second level, and then right at the yearly pivot will be my third level on Ethereum. I'm spacing this out over about $1,000. So $300, $300, $400, that's going to be my play. I'm still holding from 2019. My lows around $350 to $400 that's my cost, my break even on Ethereum. So anything that I'm buying up here it's increasing my break even. So I'm not a huge fan of that. However, I think that after a pretty decent sell-off, obviously we had Ethereum drop around 60% in the last week or two. So that's a pretty impressive fall. I would certainly say that it was much needed and long overdue. But if we take a look at Ethereum versus Bitcoin, I still think that this is in a buy zone, right? So we have this awesome head and shoulders pattern, left shoulder. I'll draw this out. So left shoulder, head to neckline. Here's your right shoulder. Here's where you break the neckline, and this thing just erupts with a bullish trend. Now, we came back to find the 2019 yearly pivot. Somebody asked me last week when we were talking on Friday for the Pulver report, how often do these yearly pivots get hit? And my reply was, don't take my word for it. Look at it on your chart. Go back and see some of these massive pivots and see that these yearly pivots do get hit more often than not. And if you look at things like cryptocurrencies and FOREX, you'll see these yearly pivots are amazing. And not only look at stocks, look at the S&P, look at the SPY, it works. So, the stock market, you might see multiple pivots that have been missed. I was very bearish going into 2020 because we had a lot of pivots to the downside. So I'll just show you that really quickly. What did that look like? So here is the SPY. And take a look at these yearly pivots. So we had going into, this is 2017, 2018. What was kind of amazing about 2018 is we just used the yearly pivot in 2018 as support, came all the way back up here with a rising wedge, and then crashed down to find the yearly pivot. And that was literally at the end of the year. This market dropped in December in order to find that yearly pivot, use it as support, and then off we went. So we not only hit the 2017 pivot, but we went below it, and then we ran right back up and hit the 2018 pivot. Look at our drop in 2020. We had 2020's yearly pivot sitting right there. I was looking for a correction to take place, and there's your crash. There is your obvious, acceleration through, I think, everything we thought it would be. There's our massive formation, and we just crashed all the way down to these kind of, surprisingly amazing technicals. And I'll even bring this to your attention. Take a look at this yearly pivot. Look at how close the COVID crash was from 2020 coming all the way back into that 2017 pivot. So long story short, the pivots work. I love them, especially when we can have, this is kind of my favorite setup. If we have a yearly pivot right here and price is already trading at a major, major low, if you see a bullish formation way down here, the odds of coming back up halfway to that pivot, the odds of coming back all the way up to that pivot, I love those trades. Doesn't matter if it's stocks or Forex or cryptos. Those yearly pivots to me are, massive, massive targets. Okay. All right, let's go back to cryptos for a second. Let's take a look at Litecoin. Litecoin is at 164. This one's had, again, just an incredible sell-off from high to low, 72% on Litecoin. This is another one with the chart alarm going off at 160. In fact, I'm looking at, we had a low around 119. The yearly pivots around. I'm gonna throw another. I threw some bucks at it this weekend on Litecoin. I'm throwing another few dollars at it. I think this is another one that can still outperform Litecoin versus Bitcoin. Okay, look at that pullback. Man, that's crazy. So we still have the start of this falling wedge is all the way back up here towards 007 or 008. This is Litecoin versus Bitcoin. So as long as we maintain this low, we had this massive run, massive pullback. If it builds, we can still see this thing make its way back up to this area. I could still see Litecoin, let's say the next 3 to 6 months, outperforming Bitcoin. So from that standpoint, we did hit Wednesday's low from last week over the weekend. So a good kind of bargain shopping level on Litecoin. The yearly pivot's just a little bit lower, around $100. 96 and change is my yearly pivot. There's a weekly pivot from this week that was about $30 higher. So if anyone's interested in some short-term gains, there's about a 34% run just to find this week's pivot. So that's short term, but again, I think that we could have high to low, lower high. We could end up coming back down, retest the low, find this yearly pivot, build a base again. Crypto trading might be boring. Crypto trading might be too scary, too volatile. Everyone that's been speculating might be scared out of this market for a little bit. We might see some of the profits that have been taken on cryptos make their way into gold, right? They might make their way in the dollar. People might be looking for some safe haven. We've had some pretty crazy movements the last couple of weeks, haven't we? Haven't we seen lumber prices? Look at random length lumber futures. Okay. We had a 100% rally, a 25 to 30% sell-off, and we are, again, cooking to the upside. So that was a 30% correction after a 100% rally, and lumber futures, again, on the rise. If you take a look at gold and silver, gold is at 1879. I am bullish on gold until we hit at least 1950, and I think that gold could continue to rally up towards 2,000 plus. I also think that, a lot of the volatility in cryptos, if not everyone is a fan of 30, 40, 50% retracements or corrections or falls, especially in a matter of days, then I could see some shift from cryptos into gold. So I'm going to stay long on gold. There's probably a little bit more stability, even if we have a pullback on gold. Even if we have this pullback on gold, I still like long 1950 to 2050 on gold and possibly new highs. Okay, silver. Silver is at 27.66. I got a chart alarm set, had a chart alarm set. I'm going to set it at last week's high around 28.70. So 28.70. I'm just going to say protect. I've got some pretty decent profits running on silver from this double bottom at $22.50. All I'm doing is trading SLV right there. So SLV, I bought it here at $21 and chart alarm set at 27, which is matching those highs on XAG USD, which is silver. Okay, any questions? Daniel says, do you think Dogecoin listed in Coinbase is good for the long term? I don't know, man. You kind of know my opinion on Dogecoin. I'm not a huge fan of it. I think that, I don't know. I don't know if I can actually pull myself into buying Dogecoin. If it came back into like 10 cents, 5 cents, maybe, take $100 and see if it turns into $5,000, $10,000. I don't know. Maybe not. I don't know. I just don't know if it's worth it. So long term, I don't know. I just think that what we've seen in Dogecoin is just this popularity, kind of a, social trolling that it's experienced, but I don't know. I mean, is anyone a fan of Elon Musk tweeting and moving the crypto market? Like, doesn't that seem insane? And it's not just Elon Musk. Obviously, Beijing's crypto ban and China cracking down, that was kind of the double whammy that brought cryptos to their knees for a couple of days as we sold off to those recent lows. I'm just not a huge fan. It's like, you don't think that the SEC is like pounding on Elon Musk's door or tweet or, calling him? I don't know. I mean, that doesn't seem legal that he can have this much influence on social media to, move around cryptocurrencies. But again, it's speculation, it's sentiment. There's tons of volatility. So I'm cautious on Dogecoin. I'd rather, and again, I could be totally wrong, and maybe I miss out on all this amazing opportunity if Doge does go to $1 or $5 or $10. But I still like Bitcoin, Ethereum, Litecoin. I like Link quite a bit. There's another couple that I'm really watching closely. Link flushed all the way down here to $15. It did tap those lows. I had the chart alarm. I didn't get back in on this one. I really, in hindsight, wish that I would have, because we made a nice low around $100 or $15, but there is still like $12 to $10 on Link. And so here's, again, if you joined me on Friday last week, we had this massive sell-off, right? We're getting so much volatility in such a short amount of time. I don't know if it's going to be flush down V bottom. If we have something like this, then maybe we have a cup and handle. Maybe we can look at that formation. But if we have this flush, goes up, comes back down again, I'm watching that low, watching that yearly pivot, then I'll reposition. So I'm just not in a hurry. I got back in on Ethereum, fine. I got back in on Litecoin, fine. But I'm still holding a lot of those coins from 2019 lows. So I'm adding little by little. I'm patient right now, looking to see if they'll still build a base. We're fresh off of some bearish sentiment. We're fresh off of a lot of profit taking. And I'm just not looking for this massive turnaround. But again, I could be totally wrong. Okay. All right. So if anyone's interested, know a lot of familiar names are in the room for equities on demand. So hopefully you're able to get those trades set up this morning. We have, I'll type up the symbols here. So we have plays this week. We have equities on demand. We have power play version 2 and version 3. We also incorporated, we have bull put spreads, which are our typical trades through the week, but we also incorporated some bear call spreads. So we have a lot of trades just on power play version 2 and version 3. If my counting is correct, we have 26 trades this week. So that's a lot. And I don't mind because we've had some pretty steady, gains, and even with a really turbulent week, we've had break even or better. We've had some good weeks with $300 or $400 of per one contract for all the trades. So we've had some steady gains, and I'm really happy that we incorporated some bear call spreads, because even if we have a wash market this week, which if the SPY doesn't go any higher or doesn't go any lower, we might see these fierce lines defended once again by the bulls. Okay. Daniel, ever think about it? Yes and no. I mean, back in 2017, yes. But I also, everyone that I knew that got into it and started to get really, start literally throwing like tens of thousands of dollars at mining cryptos, ended up losing a ton of money in 2018. So I could see that repeating itself where, 2018 to 19, if you got into mining, was probably very lucrative because your gains from 2019 into 20 were incredible. From 2020 to 2021 with the runs that we've had in, major coins and some of the altcoins, tons of money to be made. But if you're on the wrong side of that move, if you're mining, and your mining costs get more and more expensive, and we have a 50, 60% crash where it comes back to those mining costs, it just eats up your profits. So have I looked into it? Yes. Do I want to do it? No. I'm not really that interested in the overhead that comes with it when I could rather trade it and still get some growth and speculation out of the just trading cryptos as opposed to trying to mine it. Not that interested in mining them. Riot trade, they called away the stock and puts, okay. Yeah, we can take a look at it. I don't know if they did call away the stock. All right, so let's take a look. I'll take a look. And if we don't have Catherine, if we don't have a huge segment dedicated to it, we'll certainly talk about it in equities on demand, because I might look at buying, if I can get something at like $23, I'll see where Riot's trading at right now. So I'm going to get logged into my platform here. Let's take a look at Riot. So really quickly, for anyone that's not familiar with equities on demand, we've got like I said, about 26 trades this week, which are, again, they're great trades. They're essentially set it and forget it. We're going to collect some credits. We're looking for, the bulls to defend certain levels. We're looking for certain highs to hold. I think we're well positioned for whatever the market wants to do this week. I wanted to go into the SPY really quickly. It is 9:20, so about 10 minutes before the open. We're looking at a pre-market gap a little bit higher, about $3, just shy of $3 on the SPY. Let's go to the DIA. And pre-market, we're up about $1.30. Let's go to the QQQ. Pre-market, we are up around $2.40. And IWM, pre-market, we are up just shy of $2, about $1.30. So it looks like pre-market, we have everything looking bullish. So we'll look and see if those bull put spreads are nicely played this week. We're also going to be talking a lot about our Master Blaster strategy, looking for more directionally neutral trades. I'm going to take a quick peek here at Riot. And where are we at with this stock? Because I had a sold call at $20. That stock was called away. It closed last week around, let's see here. We closed last week around $24. It got called away. Pre-market's 23.52. So I'm going to try to put in a limit buy. So I'm pretty sure that my Riot was all called away. Riot, I am in a power play for 6.4. And my stock got called away at around $23.10. So I'm going to go ahead and put in a buy trade. And we talked about this on Friday. I'm looking for, it's probably going to take, maybe 3-4 weeks to repair this. Essentially, my break even is, 29 and change. And the stock got called away at $23.10 break even. So I did take a little bit of loss on Riot. If I'm trying to recover, here's what I can do. One is I can do nothing and take my $600 loss on Riot and be done with it. Okay, that's one thing I can absolutely do and not even try to trade this anymore. But if I do that, I'm going to lose about $600. The other one is I can look to own the shares around $23.10, or let's say $23.50, and know that my break even was around 23 or $29.50. So over the next maybe 3 to 4 weeks, depends on what price does, if I can sell some at the money calls and collect, let's say $1.50 or $2 and not have the stock called away, over the next maybe 3-4 weeks, I could probably build back those credits to make up for the $600 or $650 loss that I have right now. So that's good. Now, the reality is, just hear me out. The reality here on Riot is, could we drop into $15? Could we drop into $12? Take a look at our stock. We have a weekly pivot around 36. We have a weekly pivot around 45. Could we drop more with these cryptocurrencies? Yes. And so what I think I'm going to do is right now not do anything. If my stock was called away at 200 shares, I'm not going to do anything, because the reality for me is I could buy this thing. If it falls, I could buy this around $16 or $13 and then take this back up to $25 or $30. And let's say that I can make $1,000 in gains with the $600 that I was upside down from that stock getting called away. So if I wait a little bit longer, I feel like technically I can probably have a better setup on Riot. And here's what I'm going to do. I'm going to go ahead and set a limit buy. There's a monthly pivot right there at 15. There's a yearly pivot at 1202. I'm going to set a limit buy. Okay, limit buy at $13. And I'm going to buy 200 shares. Okay, I'm going to buy 200 shares. Now, if I get filled on 200 shares, I can look at going, deep in the money, like something like $28 to $30, and trying to collect maybe 30, 40, 50 cents on selling those calls. But it's enough where if I do sell that call, collect a little premium, and it rallies up to those levels, I'll get the gain in the stock. If I go from a $13 position to 26, that's 100% gain on my position, right? So that will more than make up for my loss. In fact, if I buy 200 shares at $13, that would put me around $2,600 in capital. So 13 times 200 is 2,600 in capital. If it moves double that, that's a pretty good chunk of profit for the fact that I'm upside down like $600. Make sense? So I'm going to put in a limit buy at $13 and see what that gets me. So Riot, I'm going to put this right now on my broker platform. So Riot is right here. Go into trade and buy. I'm going to go 200 shares. Limit at $13. Good till canceled. And we're good. Okay, review. Place. Okay, so that order is in. So $13. Now I'm going to go ahead and set a chart alarm. This chart alarm is at $12 and change. So I'm going to set a chart alarm at $13 and say check for fill, because I'll check my broker platform there. And then I'll set a chart alarm at the yearly pivot, which is $12.15. Yearly pivot hit. Okay, so that's going to be my plan on Riot. The stock got called away. Rather than chasing it right now, here's what I think could happen. Stock could stay right here and consolidate, but I feel like we can probably push a little bit lower. I'd rather get filled at a better break even, work with a couple hundred shares here. And the fact of the matter is, if I was in 200 shares here, I don't mind doing another 1 to 200 shares lower as well, and just kind of do it the old school way, which is just work through the trade, know that I'm upside down like $600, but try to make, $1,300 or $2,600 on this trade and end up making some money in the long run net. Okay. Right? Okay. So that's Riot. And we can talk more about that in session at 10 o'clock, but that's what I'm going to do right now, is not even worry about, trading options on it here in case we fall a little bit lower. Okay. Also, Riot should move fairly closely and correlated with cryptocurrency. So if we still see a little bit of a move lower, or retest some of those lows from last Wednesday or this weekend, then Riot will probably slide a little bit lower. Okay. You have to remember, this is a company that makes its money by mining. I know that they have earnings as well. Which could make this very interesting. We could have like this great report in Riot, and maybe I'll miss out. But if somehow there's a miss or this goes back down, I'd love to see us tap that yearly pivot at $13 or $12 and get filled. Okay, so that's Riot. Let's talk about some currency pairs. I want to go for maybe another 10 minutes or so today. Let's talk currencies. Let's take a look at dollar index. I was on the road for about 6 hours on Saturday. I had a chance to catch up with some good friends of mine that, traders, running a couple of funds. We talked about a lot of stuff. We talked about some macro stuff. We talked about the current landscape. Tyson, I know, is had 20 some viewings on Friday for his house and had over asking offers already. So I just had the conversations related to, is there some euphoria going on right now? If you think about it, it certainly feels like it. It feels like we're kind of at this top end of real estate. We're kind of at the top end of, I was looking at so I had to borrow a friend's car this weekend. I work from home. I don't need a vehicle. So I borrowed a car this weekend. Now, the reason I borrowed a car is because there was no inventory for a rental. I live like 2 miles from a local airport, and they have, Enterprise and Hertz and a couple of companies. They didn't have any inventory to rent a car. Even if I did get the car, it was $75 for a day. Now, for the last 5 years that I've been doing that, I've paid like $20 to $25 for a day for a car. Now it's $75. There's no special weekend. I live close to university here. Graduation was a month ago. It's summer. There's summertime. There's no students here. So it's just weird. And so it feels like, okay, real estate has peaked essentially, or it's at the peak, and we might sustain these highs for a while. We could still have this crazy market as interest rates stay low. But if real estate is at its peak, used cars are at its peak, consumption is at its peak, it's only a matter of time before that gets a contraction, in my opinion. So what I'm looking at, the reason I'm even talking about this right now is there's just a lot of factors. And I think that right now, maybe interest rates stay the same. We talked about this last week a little bit in equities on demand. I looked at the historicals of how much percentage can fluctuate for mortgage rates. So currently, I'm looking at the TNX. Okay, we're at 1.62. Now, could this be the dip before the rip? Could we have one dip into like 1.4, 1.3 until this thing just rips higher? Possibly. Or could this is the rally, this is the pause, and we go higher? And so here's what I'm thinking. I hate the fact that I might go out and go, 90 to 120 days to lock in interest rates on the house I'm about to close on in September. But to me, the one-time expense could save me, $6,000 to $8,000 a year over a 30-year mortgage. That is no joke. Now, obviously, there's times where if rates go back down, I could refinance. But for the sake of closing on a house, interest rates, I feel like right now I could probably still close on a house that's sub 3%. I'm hoping. Now, in order for me to get that rate and lock that in, I'm going to have to pay for that. And usually there's, a 0.25% rate lock fee, and that's like per $100,000 that you're mortgaging. So it's not going to be cheap, okay, to say the least. It's not going to be cheap. However, I don't know. I feel like if it costs me, let's say $10,000. If it costs me $10,000 to save $6,000 to $8,000 a year for the next, that pays for itself in literally, 2 years. So, and I could be wrong. I could say that I lock it in, I drop some money to have the peace of mind, and the rates do in fact go lower, and I miss out on that, move lower, and I'll kick myself. But at the same token, I'm locked in here. I should get a good rate. And if it does go higher, I am really happy that I'm considering this. Again, this is kind of like an existential issue right now. It's like, should I do it? Should I not? Do I need to fork over the money now for the peace of mind? But the last thing I want to do is watch closing rates or interest rates go up by, let's say, half of 1%, 1%. That's a big difference. Okay. So anyway, this is the crap that I'm thinking about. And as I'm driving 6 hours on the road, this is the stuff I talk about. So I'm going to look at Mortgage News Daily right here and see where we're at with the 30-year. 30 years trading at 3.16. That's the 30-year average. So I'm guessing based on, cash assets and liquid assets and credit scores, I can probably have that, better than 3%, I'm hoping, or close to 3%. So it's going to cost me some money, but more and more I'm thinking about this. Okay. So I don't know if anybody's interested in that stuff, but if you're in the market right now to buy a home, sell a home, refinance a home, this absolutely affects some decision making right now. Yep. Yeah. Janice says you should be able to get a very low rate around 3%. I think so too. And so the reason I'm even thinking about this is because what's to happen if this peaks a little bit higher? If all of a sudden the 10-year note's up at 2%, that 30-year rate is going to probably start fluctuating to 3.5%, maybe even 3.75%, maybe even 4%. I'm not saying that that's a terrible interest rate, but lower, 3% or lower is amazing. Essentially it's like I don't know if we're ever going to see the bottom again like we had last year. So whatever. I'm talking a lot about it, but it's a pretty important deal when you're talking about, several $100,000 trying to finance your mortgage, right? So that's going on. Meanwhile, we have the dollar index. And dollar index still needs to break this trend line. We've had a lot of indecision here the last couple of weeks. In fact, we've had very sideways movement on the dollar. This week in the markets, I think this is our last full trading week of May. In fact, we go all the way this week. We officially have the close of May on Monday the 31st, and we have a new month. It'll be interesting to see if we kind of have a sell in May go away, and we maybe have some risk-off trading this week. Maybe it goes into Monday before we kick off June. I do know that I was invited to another trading battle on Friday, June 4th for non-farm payroll, so I'll have more details on that on Friday. But where are we going with the dollar? Same analysis. You'll hear me talk about this in the Flex Room this week. Is the dollar going to break this trend line? Is it going to come back down and test the lows, and then we start building some support once again on the dollar to rally back up? I think the dollar is going to get some love in the next 3 to 6 months. I say that because I feel like it's a contrarian play. Right? I think right now the whole world is openly talking about how weak the dollar is. If there's another stimulus measure, how weak the dollar is going to be, how it's going to continue to get worse. But it's not the crowded trade. Right now the crowded trade is short dollar. Right now the crowded trade is long stocks. Right now the crowded trade is, everything that I'm trying to get out of is, I think there are a lot of overcrowded trades right now. Growth is overcrowded. Tech is overcrowded. Fang T-Man is overcrowded. So I'm trying to get out of some of those and get into the stocks or type of instruments that I think most people aren't in right now. And I know that I've been long on the dollar since here, made some profits. It's pulling back. I'm looking to get long the dollar again. Okay, so I still like the dollar index. The pairs I liked, we talked about these last week. Aussie dollar, New Zealand dollar, dollar CAD, dollar Swiss. Those are my favorites. DXY, same thing. There's a low. Looking for a low. Watching for the trend line to break. Looking for technical structures to build this support and then trade it back up to these highs. Yearly pivot on the dollar index. I just showed you all these yearly pivots that are still available for cryptos. There's a yearly pivot there for the dollar. Now look, we might not find this yearly pivot in 2021. Maybe we go into 2021 and the dollar just stays here. And then end of the year, going into 2022, maybe this is when the dollar makes the move. But could we find this yearly pivot? I think we can. How long does it take? I have no idea. But I still like the setup. Okay? Anything on the currency strength chart for this week? Calendar-wise, I don't think we have a lot of major news this week to wrap up the month. I see a lot of, we have RBNZ rate statements expected to stay the same. The cash rate at 0.25%. They have a policy statement and press conference as well. This is Tuesday night. Anything else? Oil inventories, GDP for the U.S., unemployment claims for the U.S. on Thursday, pending home sales. That'll be a big one as well on Thursday. So, yeah. Conversation is going to have to be had. All right. Anything else for me today? I'd like to kind of wrap things up, have a few minutes before I start equities on demand. I'm looking forward to a good week. Again, maybe it's a fairly slow week in volatility in FOREX. Maybe we have some things get more exciting. Take a look at some of these levels on the major indices. So it is a bullish market open for the day. The SPY is up a little bit higher. Critical levels need to be defended. This low needs to be defended. This high could be broken. So if this is our, 4% sell-off or a 5 to 6% rally, we can just keep seeing this market defend this trend. And as they say, the trend is your friend. And so if we're not breaking lows, if we're not spending any time on the right-hand side of the trend line, the trend is your friend. And the market just continues to work in look, this is a hard bull market to continue, right? We've already had this crazy overextended move from the bottoms of 2020. And it's just not wanting to go down, but it's having a hard time rationalizing these highs. So is it a little long in the tooth? Is it overextended? Absolutely. All the technicals are pointing to that move. But when does it cater? When does it crater? I don't know. How does it crater? I don't know. And that's what I was spending, hours this weekend talking about is I don't know what it is. I don't know what's going to be the catalyst that does this. Maybe nothing, right? Maybe, we have all this revenge spending right now, all this excess or excessive consumption. And all of a sudden it turns into okay, people went on vacation. People have had their fun. People are back out socially, having a blast, whatever. No masks. Everybody's partying again. So let's say that everyone wants to just say, you know what? COVID's a thing of the past. Then money gets spent. Then reality hits. You feel better, you buy a car. You feel better, you buy a house. You feel better, you buy this, you buy this, you buy this. And then all of a sudden in 6 months or 12 months, you're like, okay, now let's get back to normal life. Is that do I need a budget again? Do I have all the excess capital that I can spend and keep spending? I just feel like there's going to be a contraction in consumption, and as a consumption economy, the U.S. will feel that. But is it enough to break the market? Probably not. So I just think we're going to keep dealing with these, week by week. Watch the price. If we break these lows, look out below. If we keep testing the lows and defending those lows, it's going to be those volatile weeks where we're trying to position ourselves neutrally. Whether the market goes up, we can make some money. If it goes down, we can make some money. If it goes nowhere, break even's good. Protecting profits is good. Okay, so I think there's some interest. This week I'm watching cryptocurrencies again to see if we can retest some of those lows from the weekend or last week. Maybe we can settle back into some of those lows and yearly pivots. That's one play for this week. We have a heavy start for equities on demand with bear call spreads and bull put spreads. We're going to trade some neutral directions on Master Blaster as well. So it's going to be a busy week, but directionally neutral, which I'm happy with. And in currencies, Price Action Pro is going to continue to work. I've got thousands and thousands of pips in the works for some of those dollar crosses. It's just going to be a little bit more time. Okay, so that should do it for today's Pulver report. One thing I would appreciate if you can do one thing for that YouTube algorithm, that is smash that like button for me, hit that thumbs up button for me. That goes a long way for this video to be seen, not only in my channel, but have my channel on the threads when people are searching for live trading, searching for analysis, searching for technicals, searching for stocks, forex, cryptos, anything like that. I think this hopefully is great education, free education for anybody to get their hands on. So anything you can do to share my channel, share the videos, I really appreciate that. I'll be back on Friday, 9 o'clock. See you all this week in the Flex Trading Room and Equities on Demand. And like I said, on Friday for the Pulver report, I'll let you know more details that I have on June 4th. I will be in a trading battle once again, sponsored by 8cap. Not sure who my competitor is for Friday the 4th, but looking forward to another non-farm event. Hopefully see some decent movement on, if it's a double whammy with CAD and dollar, I'm looking to have another good showing for that trading battle. Okay. All right. So hit the thumbs up button for me. Have a great week. I'll see you in Flex, see you in Equities on Demand in the next 20 minutes, and see you on Friday for the Pulver report. Okay. Take care, everybody. Let's have a good week. Talk to you soon. Thanks. Bye.